To default or not to default? That is the question that many are asking. Hi, I'm Arben Skivjani, Deputy Chief Economist at RealPage. Welcome to the second episode of RealPage Economy Express. The latest employment report revealed that the U.S. economy added 253,000 jobs in April, bringing the total number of jobs gained this year to approximately 1.1 million. Now, the number of jobs created in April over the past 3 years has remained within a similar range. And these figures certainly were not in line with the Federal Reserve's expectations, as the Fed has been working to weaken the job market as part of its battle against inflation. However, as shown in the chart, the gradual increase in the Fed funds rate has led to a somewhat weaker job market, but it hasn't yet produced the desired effect. On a positive note, average hourly earnings in April only grew by 0.5% or 4.4% over the past 12 months, which should be encouraging for the Fed. In terms of inflation, there is some good news. The Consumer Price Index rose by 40 basis points in April, bringing the annual inflation rate down to 4.9%. Additionally, the Producer Price Index dipped to 2.3%. As shown on the chart, inflation has been declining ever since the Fed began increasing its key interest rate. However, it would have been decreasing even more rapidly if it weren't for the 12-month lag that exists between new lease rent and the CPI rent. Due to persistent inflation and economic uncertainties, such as the national debt and the possibility of a recession, retail sales in April only increased by 0.4%, falling short of the 0.8% expected by most economists. Furthermore, the May Consumer Sentiment Index dropped by 9% compared to the previous month, indicating a lack of confidence among consumers in the economy. Both retail sales and consumer sentiment are significant factors in our forecast for many of the top 50 metros. Therefore, the weakening of these two variables will definitely have some negative impact on occupancy and rent growth, at least in the short run. Now, while inflation has been decreasing at a decent pace, the job market remains strong. With the summer season approaching, there is a possibility that the job market will heat up even further, presenting a greater challenge for the Fed. Therefore, we believe that the Fed will increase its key interest rate once more before the end of the third quarter, unless other key economic indicators cool off and indicate that the economy is already in the red zone. Thank you for watching, and I'll see you all in 2 weeks. Thanks.